in person. So I'm sure that has happened that she's probably been called to something else at this point in time. Honorable Chairman, Deputy Chairman, members of the committee, I'm deeply honored to present our report as the Securities and Exchange Commission on the capital markets to this honorable committee. We believe that this occasion is very auspicious and certainly provides us an opportunity as the capital markets community to focus attention first and foremost on the very important role that capital markets play in terms of enabling economies. I also think more specifically, it gives us an opportunity, as has been highlighted by the leadership of the National Assembly, by you, the Chairman, to review what has happened in the past with respect to our capital markets and to prefer solutions. Our hope is that we'll come out with a common understanding of what those issues are, as well as a path that is shared by all of us, driven of course by what we consider should be the vision of a world-class capital market. Our vision at the Securities and Exchange Commission is that a capital market that is world-class has to be one that engenders the highest levels of investor confidence, market integrity, efficient processes, adequate product offerings, sound regulatory framework, strong and transparent disclosure and accountability regime, and good corporate governance. We believe that such a world-class market is essential today as we craft the way forward for our economy, particularly because this is a country that is blessed with enormous natural wealth, whether in terms of human or natural resources. We believe that as the National Assembly, as the executive leadership, and the people of our country continue to craft the way forward to address the socio-economic challenges that we face, now the capital market needs to be at the center of this solution, because we believe that as God has blessed us with economic wealth, with natural resources, with people, that we must be able to better leverage these resources. We believe that a world-class market certainly is an efficient enabler of socio-economic development, because it allows you to optimally allocate resources. It fosters a meritocracy. It engenders good corporate governance, innovation, and entrepreneurship. And I believe singularly important because of the entrepreneurial zeal of our people and the hardworking Nigerians that we have all over Nigeria. What I'd like to do in this presentation, Honorable Chairman, Deputy Chairman, and Honorable members of the committee, is to maybe set a context for the discussion that you have asked that we have. That context for us is really to just look at our market briefly, leading up to when it peaked in March of 2008, looking at equities, looking at fixed income, looking at collective investment schemes, looking at some of what's happened in terms of the macroeconomic environment. And then talk about what has happened since January 2010. And some of what we, as the Securities and Exchange Commission, have done to try and ensure that we start to build a market that is indeed world-class. And then finally, talk about some of our own aspirations, because we do believe that we will only be successful with the support of the National Assembly, with the support of the executive leadership, with the support of the people of Nigeria. Because as you know, and as pointed out by the Deputy Speaker and the Chairman, of the committee, the capital market is indeed a gauge of the state of an economy. So let me just say a few words about the period leading up to 2008 and 2009. As I already mentioned, equities rose to a peak in terms of market cap of 12 trillion, 12.1 trillion, 12.6 trillion naira. This was driven certainly after 2006 by regulatory intervention. As everybody will recall, the central bank in 2004 mandated banks to shore up their capital base from 2 billion naira to 25 billion naira by December 2005. This was a move by the central bank to strengthen our financial banks for global competitiveness. A number of the banks sought to leverage the capital markets to raise the capital to allow them to meet these minimum capital requirements. The exercise therefore triggered a string of public offers, mergers, and new listings. At the end of the exercise, you will all recall that the increase in banks' capital base catapulted from 400 billion naira only to approximately 1.12 trillion naira, and also, of course, led to the reduction of the number of banks from 89 to 25. We have made submissions. Yesterday we submitted in 50 copies. What I'm doing is speaking to the submission that we made. And one of the charts that we show presents what the mix in terms of sectoral mix, and for those who have a copy, page 5, in 2008, and the sectoral mix of the companies listed on the Nigerian Stock Exchange in 2011. You will see from that submission that on the main board of the Nigerian Stock Exchange, that the banking sector stocks made up more than 50% of the stocks listed on the main board of the Nigerian Stock Exchange, just by market capitalization. But when you look at the end of 2011, you'll see that it is about 18%. And I say this to make the point that all of what we've seen, essentially from 2005, was very much driven by the happenings in the banking sector. As I already mentioned, we had record-breaking new issuance, which was led, of course, by issuance by banks. But that euphoria also led to issuance by insurance companies who also were responding to the requirements of their regulator and to other corporate organizations. That euphoria led to the average number of subscribers for any transaction increasing from 4,200 in 2002 to 99,000 subscribers in 2007. The All Share Index responded. Even people set up new businesses. We had many more brokers, many more asset managers, many more issuing houses. Regrettably, as you often find and as has happened around the world, there was not as much emphasis on risk management, on corporate governance. There was not as much emphasis on curtailing speculation From our own investigations at the SEC, we found that even some listed companies engineered the overvaluation of their stocks. They applied all kinds of schemes, some of it in the industry and not just relevant to our country, but globally, called pump and dump, which is a situation where you continue to create the impression that the stock price is rising, and as soon as it gets to a point where you're satisfied, you exit the market. And of course, the ordinary people, the retail investors, the uninformed, think, oh, this is rising because of fundamentals, and therefore find themselves holding a stock when you have exited and made money from exiting. We have schemes that were wash sales from our investigations, where you have somebody on one side who's buying and a related party on the other side who's selling. And the idea is to create the impression that there's actually trading on the stock. We've had investigations that uncovered insider trading and other forms of market abuses. We even hear from our investigations that some institutions set up shell companies, and in one specific case, we understand that depositors' monies were actually taken and put in those shell companies and used to purchase shares in the stock of a particular financial institution. I gave this as examples of there was the regulatory intervention, but there was also behavior which undermined the integrity of our market. We also had a situation where, Honorable Chairman, as you've already mentioned, there was a lot of focus on margin finance. So people who didn't have money to invest now borrowed money and used their stock as the collateral for this. So that creates leverage and emphasizes and amplifies a situation. So of course, when the global financial crisis then became important, starting from March of 2008, it triggered a large portfolio outflow from international investors who exited the market because of the challenges they were facing in their own countries. Of course, our local investors who were unaccustomed to huge and persistent declines started to panic, and of course fueled the sell orders, further depressing prices and eroding investor confidence. This, as I mentioned, was exacerbated by the margin finance with individual investors, with brokerage firms, with some large institutional investors. So essentially, between 2007 and I would say from the peak of March 2008, our market lost 70% of its value in 11 months. In 2008, at its peak, as I mentioned earlier, the market cap of equities was 12.1 trillion. Some people say 12.6 trillion. By February of 2009, it had declined to 3.9 trillion. By the end of that year, it had basically given back some of that decline, and the equity markets, in terms of market cap, was at 4.99 trillion in 2009, December of 2009. There comes us as SEC, and I will give some context, that we had a new board that was inaugurated, I believe, in June of 2008. And as they saw some of these things happening, they decided to set up two industry-wide committees. One of them was called the Market Structure Committee, led by Dr. Suleiman, who is very well known in the management consulting financial sector space. And their mandate was really to try and understand what it would take to build a world-class market. They also set up another committee on corporate governance, and their mandate was to try and review our 2003 Code of Corporate Governance and then craft a background which would form what would determine a review of the 2003 Code of Corporate Governance. I give this context because when I then arrived in January of 2010, the committee had already submitted its report as to what it considers a world-class market and what it would take to build that market. What therefore I did with my leadership team is to distill what are those elements of building a world-class market, which I've already indicated to you, and work to implement the recommendations of that committee. I will talk a little bit later about the A.B. Mahmood committee. So let me just maybe, having painted the picture leading up to January 2010, now talk about what we have done since January 2010 and the response of the market. As I mentioned, in terms of market cap, we had a market capitalization of 4.99 trillion as of the 31st of December 2009. By the end of 2010, we had a market cap of 7.9 trillion. And of course, it meant that equity market capitalization had increased by 58.5%. But you have to take account of the fact that we had a very important listing, which was the Dangote Cement listing, which today represents, give or take, about a quarter of the market capitalization of the Nigerian Stock Exchange. And I give this context because of some of what we're going to ask in the future is support to encourage large companies to list on the Nigerian Stock Exchange. We also had, as you know, Honorable Chairman, Honorable Deputy Chairman, Honorable Members, with your support, the executive leadership had the establishment of an asset management company, which of course took away the non-performing loans of the banks and really started the process of protecting our financial system. In our submission, we give other information that support specifically how the market has evolved in 2010 and how it has evolved in 2011. But what I would like to highlight was that in 2011, in terms of our equities, that recovery that we saw in 2010, most of it was actually given back in 2011. And I'd like to talk about some of what drove that, because as you know, our economy is connected to the globe, and a lot of what happens globally also affects us as a country. I want to just briefly highlight some of those, and for those of you who have our submission, I would suggest that you turn to page 20 of the submission. Those issues are very much with us still. It's the weakness in the global economy, most signified by the unprecedented downgrade in the United States credit rating, general economic uncertainties across the world, but most importantly, the Eurozone debt crisis, where there's some progress today that's being made in resolving that, but where there's still very, very serious issues with Italy, with Spain, with Portugal, and a few others. But you'll remember also that at the beginning of last year, that you had the political impasse in Cote d'Ivoire, which had some contagion effects with our market. You also, of course, have the Arab Spring, essentially the crisis in the Middle East, North Africa region, which also had some contagion effects. I also want to point out that something significant, and we highlight it on that same page, is the efforts made to resolve the banking crisis. I'm sure that the central bank will be in a better position to highlight this, but I just want to make a few comments about it as a way to remind us, in terms of context, that in 2009, the central bank the Nigerian Depository Insurance Corporation, and indeed the Securities and Exchange Commission was actually involved in audits of banks, which led to the central bank questioning the integrity of 10 banks and indicating, and I would use my own words, the fact that some of these banks were in distress. And if you remember, there was an injection of about 620 billion naira into those banks that were in distress. But you will also remember that the central bank then started to establish a process and a timeline for banks to be recapitalized because they were worrying about the systemic risk issues. At the time, they gave, I believe, from that time until September of 2011, which is probably essentially a period of 2 years, those banks had that period of time to be able to recapitalize. At the expiration of the deadline that they had given for recapitalization, 3 of the banks, AfriBank, Bank PHB, and Spring Bank, had not met the requirements for recapitalization and appeared at the time not to have the capacity to do so. So in a preemptive step by regulators to save the financial sector from systemic failure, the Nigerian Depository Insurance Corporation, instead of liquidating those banks, established bridge banks, which were formed, of course, under a purchase by assumption agreement, and enabled the preservation of the deposits of those institutions, which is why today, around the world, Nigeria is one of the few countries where there was a banking crisis and there was no loss by any depositor. But of course, what that meant for the shareholders of AfriBank and Bank PHB and Spring Bank is that essentially they lost their holdings because the banking license was withdrawn and the shareholders lost their holdings in those institutions. I make that point because I'm comparing 2010 to 2011, and each of these 2 years are still better than the prior years leading up to 2010. I also make the point about the interest rate hikes that we had in 2011, which, as you know, related to the central bank revising the monetary policy rate, essentially to fight inflation. Many of you here are economists, and you know that inflation is one of the biggest challenges of any economy. I think the great example is the great example of Germany, who, after the inflationary years, have made a significant effort to ensure that the inflation is certainly never above a certain level. And you will know that previous administrations, under President Obasanjo, this administration, that whole point about conserving the wealth of Nigerians and fighting inflation is something that is important. But what that meant for the equity markets is, of course, that there was a hike of interest rates from 6.25% using the benchmark rate, the MPR, in January to 12% by the end of the year. This, of course, meant that as capital market investors, there was less of an interest in equities, but then more of an interest in money market instruments or in fixed income. We also make the point about local investor apathy. And I'd like to make that point and at the same time make the point about foreign investor participation. What we saw starting in 2008 was unprecedented. We'd never had a stock market that had had a decline. Talk of a decline of that significant level of more than 70%. And what we had in our markets was essentially institutional foreign investors, institutional domestic investors, and institutional and retail investors. But our market, as the Honorable Chairman mentioned, was primarily driven by retail investors. And of course, as he pointed out, if you put your pension, your wealth, your health in the future, the education of your children, the savings that you put, if you put it in the market and it declines in that manner, what we have seen across the world is that it will take you time to come back to the market. And I will, when I talk about some things we're doing in the SEC, talk about some of what we're doing to try and bring back investors to the market. As I said, I'd like to at the same time talk about foreign investor participation. What we have seen since January of 2010 is a very significant participation of foreign investors in our markets. It reminds me very much of what the Ugandan president said many years ago when I worked for the African Development Bank, that maybe foreign investors in his country are wearing extra glasses and are seeing something that we, the locals, are not seeing, and encouraging us as locals to try and wear the glasses that they're wearing so that we can see what they're seeing. But this is very significant because from what the stock exchange tells us, that on average over the last 2 years, since January of 2010, they've essentially made up at least 60% of the trades on the stock exchange. But I think what is the good news is that they've not just made up 60 or 70% of the trades on the stock exchange. We've actually had, both in 2010 and in 2011, a net inflow of money. In 2010, we had a net positive inflow of 166 billion naira. And in 2010, we had a net inflow of 187 billion naira. And in 2011, we had a net inflow of 166 billion naira. So I make the point that they are clearly seeing something that we are not seeing. Also important to highlight is that the assets of foreign investors under custody by the 4 main custodians as at September last year was about 730 billion naira, according to the information available to us. So while domestic, particularly retail investors, have continued to shy away from the market, the foreign investors have been in the market. And it is not just particular with Nigeria, but it's a tendency that you see that when the market is high, that's when retail investors tend to come to the market, and then when the market is low, they tend to be ambivalent because, of course, they've gotten burned, so they're more careful about going to the market. But institutional investors are more knowledgeable and therefore tend to know that on the basis of fundamentals that the market is relatively low. Some of the research that we've seen by some international houses on our market show that on an average price-earnings ratio, that our market is actually the lowest in sub-Saharan Africa. And I'm trying to think of the exact dates of this research, but this specific one said that on a price-earnings ratio, we were about 7 times, while Kenya, which is a next to us, was about 8 times. And for those, and I'm not inviting anybody necessarily to invest in the Nigerian market. I would if I could, but as a regulator, I don't. But when you look at the fundamentals, this is where our market is. This is probably the time for people to consider investing in our market. But I put the disclaimer because I'm a regulator and not an investment advisor. Also important for me to highlight is that from the margin exposure that I had mentioned, that a number of our brokers have had a debt overhang, which the financial regulators are looking to see how they can provide some support in that respect. I do think also that it's important to mention that, of course, the initiatives that you yourselves are taking, the executive leadership, to try and enable people understand some of the media around the security issues that Nigeria is facing is very, very important. Because I think usually for our country, the perception is always worse than reality. And we encourage you and the executive leadership to continue to make those efforts to present what the issues are and the great efforts that you and the executive leadership are making to try and control and manage the situation. We have in the document that we've circulated information about the fixed income market. I will summarize that information to say that we had a market that was predominantly equities driven. Given some of the way that rates have moved since last year, there's a greater understanding of the importance of fixed income markets. But even more important is that both the federal government and the state governments leverage the bond market to fund infrastructure, to fund their socio-economic projects. And what we have done as SEC is to make sure that the regulatory framework that supports fixed income markets allows the development of the market, but at the same time allows investors to ensure that their interests are particularly protected. So we've made a submission also on fixed income markets. We've also made a submission on collective investment schemes. And it is something that we have worked on more intensively over the last 2 years as a key response to some of what retail investors had to contend with in investing in the market. We believe very strongly, as happens in other markets, whether it's in the US, where 60% of the retail population invests in the markets through mutual funds, or in the UK, or in Brazil, where in other instances I've given the information that 500,000 investors invest directly in the market, while 10 million investors invest through collective investment schemes. So we at FCC are encouraging the development of the collective investment scheme industry. Some of the actions we've taken in that regard is to ensure that fund managers come together as a trade group so that we can interact with them and share ideas about how to move the industry forward. So you'll see in our submission that there has been a recent growth in the level of collective investment schemes. We've also tightened the regulatory issues associated with collective investment schemes as we encourage more retail investors to seek the expertise of financial experts as they think about the markets. Because what we are told was in the period leading up to the peak in 2008 that a lot of people were mis-sold products that they were not familiar with. We're also working on developing the financial planning and the investment advisory business in Nigeria, as you have in other parts of the world, where only qualified experts in the future will be permitted to sell products to investors. Let me now talk about the measures in general. I had said to talk about the measures, but I do want to focus more specifically on measures that we've taken to strengthen the Nigerian capital markets. And for those of you who have the document, I refer you to starting from page 25. We believe, first and foremost, that there were regulatory gaps, both with ourselves and with other regulators. And so we are the first to say that we need to improve how we do our work. Because, for example, there were no margin guidelines in Nigeria. In some countries, banking stocks are not even marginable. But in Nigeria, people were just allowed to invest on margin without any guidelines. In 2010, of course, the central bank and ourselves issued margin guidelines. But we also looked internally as to how we can strengthen ourselves with respect to ensuring that going forward, we would never have the kind of thing that we had previously. And for us at SEC, it is technology, it is human capital, it is our internal controls and our internal processes. In terms of technology, we essentially were not digitalized before I arrived in January 2010. There had been investments made, but essentially we were not digitalized. Today, I can confirm that the Commission has succeeded in building a shared technology system for common services and capacities, and that we have connectivity with our offices around the country. I can confirm that there are productivity tools for staff to be able to do their work, whether workstations, laptops, or handheld tools that enable them to work even outside of the office. We've commissioned a data center, and the data center is fully equipped. It has a fully equipped network operations center. We have sufficient storage that allows stability of our systems, and we're working on building the same for the Nigerian capital markets. One of the feedback we've gotten is that our application processing is still very manual, and so we're working on an electronic registration and returns analysis system. In the interim, we have provided emails in which intermediaries can now make submissions to us. We believe that that will strengthen both the speed of processing but also the quality of processing, because then we can do our analysis much more easily. We also believe that in our business and in any business, it's all about people. And therefore, we have been an organization over the years that has always valued training, because we recognize that this is an area and a sector where you have to keep learning and learning and learning all the time. So we've revamped our training program so that it's more focused on the needs that we have. But we also recognize that over the years that we haven't made as much of a significant effort to build our institution. So what we're looking at and what we have done is to have, first and foremost, a transparent process to bring in young people into our organization that have core skills. Because one of the challenges we've had is that we haven't had as many people in the core areas of accounting, law, finance, economics, and I may add technology, given that we want our business to be driven by technology. And I would like to add, and it is in what we submitted, that one of the other things that the board of the SEC did in 2008 was to invite Accenture, a reputable consulting firm that all of you must have heard of, to do an analysis of the SEC. And some of what we have done as a leadership team is to respond to the feedback that we were given. And for us as SEC, it is human capital, but that we have more people in non-core areas than in the core business of the Commission, which I've mentioned, technology, that given that we're in the 21st century, that we need to do much more to leverage technology in doing our business, because it enhances controls, it also enhances the integrity of the work that we do. We also, of course, when I joined in January, I invited the US SEC to do a peer review on us as well as on our markets. And some of what I've said was confirmed by the US SEC. And we have a very specific comment about some of the issues that they observed with us. I'm very delighted that one of the things we've done is to leverage my experience from multilateral agencies and have a young professionals program, where we've brought in people who I would consider the best and the brightest. I invited some of them to come to this session so that they can learn from you. For that particular program, I'm told that we had 34,000 applicants, and we selected 52 people from the 34,000 applicants. At the time that I was there, issues of governance and internal controls are very, very important, and since I've arrived, I've paid attention to that and focused more specifically on that, and I can give more specifics on some of the things that I've done in that respect. As I said, it is important as you look at what happened in the past and how we can move forward to start with ourselves. I'd also like to comment about the Nigerian Stock Exchange. I'm sure that the Stock Exchange itself has made its own submission and will be able to comment about it. But as the apex regulator, it is important to comment about it. We felt very strongly that the stock exchange is a very visible symbol of the Nigerian capital markets and therefore any capital markets. And you will note, of course, that in August of 2010, given the outcome of our own investigations, of some of the feedback that we've gotten, that we intervened in the Nigerian Stock Exchange. As you know today, we have a new CEO, we have a new executive director, and we're very delighted about the work that they're doing in terms of improving technology. What we've been told is that they're going to upgrade the technology platform such that by next year we will have a more robust platform as we prepare to realize their vision of us as Nigeria being the gateway into Africa. They have outlined a plan which will lead, they hope will lead to a market capitalization of $1 trillion by 2016, with the introduction of 5 products by 2016. Of course, today we have equities and fixed income. Last year, we supported them in the introduction of exchange-traded funds, which, as we've seen in other markets, has been a great fillip to markets growing. And so we're very delighted that they're on this plan to develop products that will support the development of our markets. We feel strongly, and I'll comment a little bit about the issue of listings and about the exchange representing the economy, because today we don't believe that the exchange represents the economy. We're also working with the exchange and the owners of the exchange on preparing the exchange for demutualization. As you would have seen from your own research around the world, demutualization is known to enhance global competitiveness. So our board, on the 22nd of September 2011, set up an industry-wide committee to examine issues around demutualization. And the recommendations of that industry-wide committee was actually discussed by our board, was presented to our board on Monday, yesterday, the 12th of March, and they submitted their report before then. It is expected that if and when demutualization is done, that it will reposition the Nigerian Stock Exchange to provide a fairer, more efficient, and more transparent system. We think it will enhance liquidity, improve price discovery, and institute good corporate governance, which we believe are the essential features of an effective self-regulator. Most importantly, we want to make sure that it bolsters investor confidence and it enhances international competitiveness. What we have seen in our own research across the world, that even though demutualization is a more recent phenomenon which started in the late 90s, what we've seen across the world is that most markets have done much better with the demutualization of the exchange. And so that is something that we submit also as something we would certainly like some support with. I would like to comment about the Abuja Securities and Commodities Exchange. We believe very strongly that the commodity exchange is very key to the economic Minister of Agriculture and ourselves, and the Abuja Securities and Commodities Exchange are collaborating on this effort. We believe that it's particularly key given what the Minister of Agriculture has outlined as the transformation agenda for agriculture. I had said that I would come back to view the 2003 Governance Code. We believe that as we look to position ourselves and our market as a whole very properly, because we believe that it is a very key element of the competitiveness of any country. Even the Global Competitiveness Index of the World Economic Forum does provide data on how every country is doing with respect to issues of corporate governance. So we're very pleased that after the submission of the report of the A.B. Mahmood Committee on Corporate Governance, that we ourselves within the SEC and our board worked on their submission, which led us to issue a new code last year, the new Code of Corporate Governance. And as you may know, Honorable Chairman, that Code of Corporate Governance became effective on the 1st of April. The code is quite extensive. It covers all aspects of corporate governance. We have been carrying out enlightenment sessions with publicly listed companies to enable them understand and effectively comply with the code. Of the 198 listed companies, 135 of them have signed up for full compliance with the new code, which will no doubt, in our view, promote transparency and accountability in public companies. We're also working with the market in terms of strengthening the capital markets community. We have revamped the Capital Markets Committee, which is really the vehicle as a capital markets community that we use to work on the key issues that affect the capital market. But we've also worked with the US SEC Commission and, with the US SEC and USAID, the other funding agencies like GIZ, Germany, to provide very specific training on compliance issues. One of the ones I'd like to mention is the one that we did in July of 2011. The workshop certainly enabled us to confirm our ideas on global best practice, to exchange ideas on enforcement, on issues of contemporary market development. On issues of strengthening public companies, I think it's also important to highlight what we are doing in terms of enhancing improved financial disclosure. Because as I said, it is a competitiveness tool. It is the element of a world-class market. So both ourselves and the NSC have strengthened our enforcement machineries. You'll see greater compliance today with the returns that we receive than you had in the past. You may also know that January 1 this year was really the effective date for the adoption of international financial reporting standards. We believe that international financial reporting standards, which today I think has compliance from more than 100 countries, is very important in terms of branding our market as a world-class market. So we've worked very closely with the Financial Reporting Council and other stakeholders to get to the point where we're migrating to international financial reporting standards this year. Indeed, because of the scarcity and dearth of skills in this area, we have lent the Nigerian Capital Markets Institute to the Financial Reporting Council because they want to commence an IFRS academy and they don't have facilities to commence that. Among some of the things, simulated more than $15 billion in pension funds, which we feel are very critical to investing in the Nigerian capital markets. We're working on the introduction of products. I've talked about corporate governance. Another area that is key is really leveraging technology, whether for dematerialization or for dividends or for offers. And we're promoting other platforms like over-the-counter platforms in this respect. Let me, Honorable Chairman, maybe just talk about new listings, because we do think that this is particularly important. First, of course, what makes the market is supply and demand. Demand from investors, supply from listed companies. But I think even more significant is that what a capital market provides is medium to long-term funds. And the way that the market provides it is either that people issue bonds or that they go and raise equity. And the way that they raise equity is through listing, in this case, on the Nigerian Stock Exchange. What we are very keen to work on is, with you and with your support, is to encourage companies to list on the Nigerian Stock Exchange. In this respect, both the exchange and ourselves are doing our own bit. The exchange, and I would say it's unprecedented in recent history, reviewed the listing requirements such that those requirements respond to the needs of the country. So in the past, they had standard requirements for every type of company. Today, they have requirements that support better the exploration and production companies in the oil and gas sector. They have requirements endorsed by ourselves that support small and medium-scale enterprises. We feel very strongly about small and medium-scale enterprises because, as you all know, all over the world, it is what creates jobs. And one big challenge that we have in Nigeria is the issue of job creation. And so first and foremost, we have revised the listing, or they've revised the listing requirements, and we have reviewed them and approved them to enable small and medium-scale enterprises and companies to list on the Nigerian Stock Exchange. We believe strongly that multinationals, large companies still need to be encouraged to list on the Nigerian Stock Exchange. We believe that it enhances the level of corporate governance because there's greater scrutiny when you are listed. So we think that it makes sense from a corporate governance point of view. We think it makes good business sense for them. We feel that it makes good business sense because there's brand extension. Many more people recognize and understand their brand. There's also greater empathy. I mean, the example that I always give is that for telecom companies that have base stations around the world, around the country, if the Nigerian people know that they're invested in those companies, they'll be forming human shields around those base stations and help protect the assets of those companies. So we really seek your support and assistance in encouraging large companies who should certainly be listed on the Nigerian Stock Exchange to list. I'd like to just comment, focus on the comment I made around whether the stock exchange today reflects the Nigerian economy. Agriculture, we're told, makes up 40% of the GDP of the Nigerian economy, yet only 0.04% of the market capitalization of the Nigerian Stock Exchange is really attributable to agribusiness. We don't have any utility companies that are listed, so we pray and hope that with the transformation agenda on the power sector, that particularly with the generation and distribution companies, which we understand there are 17 of them, that as the Minister of Power and the Bureau for Public Enterprise and the executive leadership is reviewing private sector interests, that there is a plan that these companies will list on the Nigerian Stock Exchange at some point in the future. Because all over the world, there's a very strong link between corporate governance and listing, but also in terms of from a business point of view. I do think it is very important for me to cover two other areas which we as SEC feel is very significant. One of it is some of what we've done to strengthen regulatory oversight and enforcement. We at SEC believe that we cannot have a strong market or command investor confidence and public trust if our enforcement machineries are weak. We believe that our greatest strength is in our ability to take enforcement action without fear or favor and without regard for whose ox is gored. The Commission, since I arrived in January, has been very clear about its zero tolerance for any market infraction, because we believe that any such act undermines the integrity of our market. And I personally believe that the perception of us as a country is worse than reality, and therefore we need to do much more so that people understand that we mean business, particularly on issues of integrity. You would have seen over the last 2 years the various actions that we have taken against the capital market operators or issuers or others, whether in respect of inadequate filing of returns and other market infractions. We believe, of course, that risk management is such an important issue, and as I mentioned, the 2011 Corporate Governance Code really talks about it. We have included information about rulemaking since the submission of the report by the Dr. Suleiman Committee. We've had 70 new rules and rule amendments that we released in 2010. We've released additional rules because rulemaking is one of the ways in which we regulate the market, because it provides guidance on what the limits are in terms of what is acceptable. We've suspended companies for violations. We have referred a number of companies to the law enforcement agencies, so we're very delighted that they are represented here. Many people have been aware of the actions that we took against 260 entities and individuals, and this has resulted in cases in the Investment and Securities Tribunal. You will note we have also closed a number of wonder banks, which I think is an unfortunate thing that happens here in Nigeria and across the world. In other parts of the world, it's called pyramid schemes. The NSC has worked with us in terms of ensuring compliance with our own directive. Started in 2008 in Nigeria, we have done more of. What we're doing is partnering with state governments, partnering with all kinds of stakeholders, because we feel that there are many ways in which you can reach investors, where we've organized town hall meetings where we're discussing the issues that they've had in the market. We cite an example of something that we did in River State in our submission on page 44. We also have even learnt the commemoration of 50 years of capital market regulation to the issue of promoting Nigeria as a preferred investment destination. We partnered with a movie producer director, Mr. Folayo, to unveil a Nollywood movie called Breeze, which educates the investor about the importance of saving and investing. We're partnering with different ministries to focus on the investment opportunities in different sectors. We continue the programs that we're well known with, the Catch Them Young program. I'm glad that Alhaji Farouk is here. He partnered with us, I believe, in March of 2010 for the program that we did in Kano. We've done programs in Sokoto in terms of educating people from when they're in secondary school about the importance of saving and investing, helping them form investment clubs. We organize quiz programs for young people. We have an annual quiz program which starts at the state level, then goes to the regional level, and then there's a countrywide level. We partner with universities in terms of influencing their curriculum such that there is a focus on capital market studies. We've produced publications, jurisdictions. So we're launching at some point very soon, and going by Section 306 of the Investment and Securities Act of 2007, we're launching a full-fledged whistleblowing initiative later on in the year. We have set up hotlines already. Some of our young professionals will actually be manning those hotlines because we do believe that integrity is the backbone of any market, and so we must use what exists in all parts of the world in terms of promoting integrity. I know that I've been long, but I haven't been as long as the paper that we submitted. What I want to say is that we do feel that what happened in our markets was unprecedented. We do feel, however, that it's an opportunity, as the Honorable Chairman pointed out earlier, for us to assess where we are and to propose solutions going forward. We believe that even though it's been a difficult period, that our market has enormous potential. We align ourselves with, if we make sure that we address some of the security challenges that we face today, if we make sure that the capital markets truly represent the economy, if we, like the foreign investors, as local investors, start to look at our market, if we strengthen the capital market operators such that they're strong enough to tackle a market that we know will certainly be a bigger market, that we will realize our collective vision of building a world-class capital market, and not just a world-class capital market that is that for itself, because we know some other advanced jurisdictions where the financial sector forgot the real sector. We want a capital market that really addresses the issues of the real sector. So we do believe that we're fortunate to have you as passionate visionaries in the House of Representatives, and that you're canvassing the course of an orderly growth and development of the countries capital market. We pray that your labor will not be in vain, because we do feel that if this economy is going to be transformed, if our society is going to be transformed, that we must leverage the great things that capital markets offer. And I want to reiterate what they are, because they engender investor confidence, they promote market integrity, efficient processes, adequate product offerings. They have a sound regulatory framework, a strong and transparent disclosure and accountability regime, a good corporate governance regime. We believe that if we build such a market, that we will certainly realize our common vision of a country that works for its people, that puts food on the table, that enables people to educate their children, deal with their health issues, and that we will truly take our place, not just as the giants of Africa, but as the giants of the world, not by mouth, but truly by the positioning of our people. Because we have great people, we need to leverage the market. I thank you, Honorable Chairman, Honorable Deputy Chairman, Honorable Members, for giving me this opportunity to share some thoughts with you. But most
the Nigerian Stock Exchange, and we gave them ample time to attend this program. We also invited the Securities and Exchange Commission and many other distinguished people, distinguished Nigerians who are here. Unfortunately, the DG of the Nigerian Stock Exchange had done us a letter saying that we have no oversight power over the Nigerian Stock Exchange. In my presentation,